Hello, welcome back to the Instech podcast. Zoya here, and this week Matthew Grant is joined by Richard Hartley. Richard has been on the podcast 3 times before, but today's conversation is a moment for reflection and celebration. Cytora, the company he co-founded, has been acquired by Applied Systems. It's a major step, not just for Richard and his team, but for the broader industry. In this episode, Richard talks about building Cytora from its early focus on risk data to reshaping how risk flows through insurance. He shares what it really takes to scale into the US, how to keep a business moving through waves of AI innovation, and the resilience needed when things get tough. So what's next for Cytora? How will Applied Systems scale, open new doors? And what lessons can founders, investors, and insurers take away from Richard's journey so far? You'll find out all inside. Settle in, this one's packed with insight and a few surprises along the way.
Richard, it's always great to talk to you. It's the 4th time we've had a podcast, but this time we're celebrating some really exciting news. So congratulations. I think you're calling in from New York today.
Yeah, well, it's brilliant to be here and brings back so many great memories of when we met at particular points in time in our trajectory getting here. And I'm in New York today, but broadly speaking, splitting my time between New York and London these days.
I started listening to some of the earlier podcasts we did, and when you write the history of Cytora, you can use those as a source material for where you started off and what you're looking at doing. Because I think the first time I met you, you were actually thinking about looking at risk for sort of political violence and things like that. So clearly the business has changed quite a lot. But, if you look at where you are today relative to where you were back in, 2015, 2016, what's the sort of linkage between where you started off and where you've got to?
We've always been passionate and really driven to change how risk flows in commercial insurance. And we started off very much, as you know, really coming at the problem from underwriters don't have really enough data to make a granular enough risk selection decision. And we soon realized that the real problem is actually the underwriter's workflow is manual. It's an email client in a spreadsheet. So you can have all the data in the world, but if you can't operationalize it into a much more streamlined flow of risk, it's a really terrible day-to-day experience for people working in the industry. And then soon realized it wasn't just the underwriter, it's also the operations teams that were dealing with the midterm adjustments and the endorsements. It was the claims teams. And really every single risk transaction that arrives, whether it's to a broker, to an insurer or reinsurer, is heterogeneous and unstructured for many really good reasons. And I think we're now really accelerating and providing a complete solution to that problem.
And of course, the news we're talking about is Applied Systems, large US technology company providing solutions to brokers and underwriters. You announced that they'd acquired Cytora last week. I know for you that isn't the end of it, it's the beginning of the next phase for you of Cytora. So other than, as we all want to do, is building a business, being able to sort of lock in some of the success. But what does it mean for you now, for the business, now that you're working with Applied?
It's very exciting. And I've always kind of believed if you're trying to do something big and really change the world, you shouldn't be too possessive or rigid over your idea, because ultimately by joining forces with other people, other companies who are also trying to solve that same problem, you can create orders of magnitude more value. So when we met Applied, I think there was an amazing cultural fit. Applied, obviously, 70% of agents and brokers have an Applied system as their daily workflow. So one implication is we can obviously broaden our market, not just from the insurers where we're predominantly focusing today, but also the agents and brokers who are sourcing the risk, and help digitize and automate their workflows. And I think that's going to really have a big impact on the industry. And it's particularly exciting for everyone in Cytora, because really our mission is to change how risk flows through the value chain. But as you say, it's a stepping stone on our long-term mission to really transform the industry. I'm incredibly excited about what's to come.
And to some extent, you've coined that phrase, decision-ready risk. It's a very elegant term because it's immediately obvious what that means, albeit to get there, as you said, is quite tricky. And I don't think it's worth mentioning. Applied US companies, so that's a strong endorsement of your own expansion into the US over the last few years. I mean, what for anybody thinking about how to build a business in the UK, or I guess anywhere else, and expand into the US? What are the lessons for you in how to sort of quickly get credibility and revenue to be able to support that?
Yeah, no, it's a great question. So I think my reflection on this is sometimes you meet teams of people or entrepreneurs who are going to say, look, we need to enter this market. And really, I think our approach was the opposite. It was just to be there from day one. And that meant many of our team every single week would actually spend 2 or 3 days in the US, 2 or 3 days in Europe and the UK, and we would just have this coexistence between the two. And I think only in that approach do you get credibility, because ultimately people need to believe that you're there. You have to be concretely there. Obviously, you can't be in two places in once, but you can, I think, compartmentalize where you spend your time. And what we found, obviously, is because large insurers and reinsurers need to diversify risk, they're in every single market. So if you want to build a real partnership with a large company, you need to be in London, you need to be in Munich, you need to be in New York and other places.
And I guess the support of your clients as well, because over the last couple of years, you've signed up some fairly major US insurers as well.
We've had tremendous support from our clients and partners, and they believed in us from a very early stage when we had very little to show for it. And what's exciting now is we're kind of still on that journey with them. So you kind of ultimately start working together, and then you reflect and you say, we've accomplished a lot, but there's so much more to come. And we're still building, I think, what the future looks like with them.
And when you start the business, and even in probably the last, in the last few years, AI only really existed in a sort of, compared to what we've got access to today, in a very small way, mostly around machine learning type applications, as opposed to the generative AI world. I mean, that therefore creates access for other companies. Many companies have come in and started to look at insurance. I mean, how have you managed to stay ahead of the competition and stay relevant when you would almost certainly would have had to build a technology stack that was not using generative AI and then pivot, or at least not pivot, but evolve quickly to take advantage of the new technology? Because that seems to be a bit of tension there for some companies, and some have suffered because of that, because they've sort of invested pre-generative AI, but clearly you've managed to sort of keep moving with the new technology.
Yeah, no, it's exactly right. So I think the first thing to say is we've gone really deep and we've been obsessed by the form and characteristics of risk. And we've really tried to understand that inherently. One way I think about this is when you think about risk, the way it's ultimately sourced in a conversation between a broker and a client, it's inherently an unstructured interaction where there'll be a broker probably on site speaking to a risk manager, trying to understand their business. And that's a dialogue. So it's inherently unstructured. And the broker's trying to really draw out information about the business, trying to understand the risk. So at source, risk as a form is unstructured. And the language domain ultimately at the sourcing of the risk is very different from the domain at the actual decision making on the risk by the insurer. And it's a bit like a patient-doctor relationship where the way the patient experiences a problem and ultimately talks about a medical problem is very different to the doctor who's trying to assimilate it to their view of, okay, what's actually going on inside the body. So that was a principle that we really believed in, and we built our platform predicated on that idea where you can be radically agnostic to what you receive, but extremely opinionated about how you ultimately want to retain and reinforce your view of risk and author your view of risk, regardless of how you're sent that information. So I think we had these very basic and primitive ideas like this that I think were very powerful, and ultimately we're very sympathetic to the deep truths of insurance risk through the value chain. But then to your point, we were very open to throwing stuff away. We started solving this problem in 2020 using machine learning on the early kind of inauguration of ChatGPT. When large language models came into existence, we threw away the machine learning and built the platform on large language models by default. And that gave us performance, it gave us scalability, and it meant we could ultimately enable our platform to scale across many transaction types, lines of business, and countries in a very short time. And that, I think, was very appealing for our customer base.
And I think that's one of the hardest decisions for a CEO or a founder to take. I mean, you were fortunate in that Aeneas, as your CTO co-founder, was with you from the beginning, but he was learning fast. I mean, I guess it's a sort of advice to other people, really, because you've done this successfully now. How should somebody that's not necessarily technically strong themselves and also doesn't always have the luxury of a long-standing partnership with their own CTO. How do people know when you've got to make that tough decision to say, like, I'm just going to have to write off what I've built because things have changed so much? And that's a big bet. I mean, you could destroy the company at that point if you get that one wrong, but you could also destroy it if you don't get it right.
Yeah, and it's really, I think, been the combination of many different people. And I think about our team, it's now around close to 120 people. We very much got to product market fit and a scalable platform through the authorship of many people. And the person who actually made the call to throw away the machine learning platform in 2022 and build LLM first, that was Sam, who leads product. And yeah, I'm probably a lot more humble than I used to be, that one person or a few people can only take a company so far. And our success really came in building a great team.
And also this sort of balance between having people who've got the insurance knowledge, but also people that bring external views into it. And having watched what the business has been doing for the last few years, when Juan Del Castro came in with a background in insurance himself, you could see he sort of applied that level of sort of, I wouldn't say rigor, because I was always impressed by how rigorous you were in looking at your market fit. But he had that context of what insurers can do and actually can't do in many ways. And actually, I think the evidence now is although in the early days of sort of insurtech or innovation, people said you needed people from outside to come and disrupt. There are very few companies that have succeeded that don't have people with insurance background on their leadership team.
Yeah, no, you absolutely need that. And I think it's ultimately a very multi-dimensional aspect, because you need deep domain understanding, which I obviously didn't bring. Like Cytora was pretty much my first job. People like Juan have brought that. You also need very strong product DNA to really build a product that can scale. So go way beyond like a capability or a prototype to really build a product that can scale. And as you know, we provide our platform on a self-service basis to our clients. So they actually do the configuration. So it has to be a great product for people to ultimately want to use it themselves without needing, our teams to do the configuration. But then I think you also have to abstract the problem, right? So you have to, it's very easy to speak to one person in one particular segment, and you get a very different view. Your background is RMS, and if you speak to someone on the accumulation side of an insurance company, you hear a very different point of view about what insurance is from someone who's an underwriter. Likewise, when you go and speak to a broker, you hear a very different point of view. So I think really to find product market fit, you have to kind of have a healthy skepticism for any one vector onto the industry, and then to try and see the problem as a whole. And it took us many years to get to that point, but I feel we're seeing the problem probably more simply than we've ever done before, which is exciting.
And I think your analogy earlier on about the doctor-patient relationship, you can take that a long way, because there's a combination of, on the one hand, there's a doctor has to solve the patient's pain, and that the equivalent there is just about your point about different people you talk to. You kind of need to solve the real problem, not the problem you think you want to solve. But at the same time, you've also got a responsibility, like as it does a doctor. If you see something else that the patient, in your case, the client, isn't aware of, but is a serious issue, you need to actually have the ability to drill down. So it gives you that. I think it gives that fascinating ability to scale the business, because you kind of demonstrate your credibility as you've got some knowledge. But as we all know, once you start looking at the nature of the risk and what you can do with that information, it opens up a whole lot more potential for getting making better use of capital, making better decisions. I'm sure that's sort of now what you're looking at as you go forward with those relationships.
Yeah, completely. It really, I think, allows you to sympathize with the actual form of a risk transaction, where, if you think about what the broker's trying to do, they're trying to understand the client, but they're having a conversation at the same time as trying to document information. So no wonder the information isn't like perfectly ordered and completely systematic. And that means information comes at different points in time. And obviously the client doesn't wake up every day thinking about the risks they have. The client's thinking about how to run their business. So there's obviously going to be discrepancies there. So I think when you really understand that, you can solve for it. And that's how we've really tried to think about accepting any type of submission, but then offering your view of risk for the insurer, so you can ultimately transmute or convert the data in one format into your target data structure. And we've been very against this idea of standardization, where the whole industry needs to standardize and everyone must agree exactly what the data structures are, which I think is really the wrong idea when you think about ultimately how risk is transacted. So yeah, it's been I think for me it's been really thrilling trying to kind of peel back the onion and get to that level of understanding, and it's been exciting doing that.
Yeah, and that standardization debate, we've sort of contemplated actually having that an open debate, and ultimately I don't know that actually serves any purposes, but it is out there, people looking to, I want to say impose standards, because you can't impose standards, but waiting until standards have been adopted before they can move forward. But I mean, what you've shown, and I guess the benefit now with generative AI, is you can't wait until standards are accepted or are being used. You just got to work with what's out there and figure out how to bring the data in. I think that's, to my mind, where you haven't let things stand in your way. You've got a vision, and you just worked out how to solve to the vision.
Exactly, and every market participant is trying to build their own view of risk, and that's a really healthy thing for a buoyant insurance market where you're not dependent on the data you receive upstream, but you can ultimately offer the view you want downstream. And I think that's when I think about how you want differentiation and how much latitude there is for any one market participant to see risk in a different way. I think that's exactly what you want. The challenge has been, for many years before, the tools just weren't there to do that in an efficient way. So if you wanted to build your view of risk, you had to be very inefficient. Now I think you can be highly efficient and you can reinforce your differentiation. So I think it's a really nice way to resolve that trade-off.
Yeah, and understanding that the impact or the true impact of that risk, or what is a true risk, and actually that classic the human dilemma of we analyze what we are able to analyze because we've got data and tools, and we either ignore or we make gross over or underestimations of the things that we can't or don't understand, which is get into the whole sort of classic black swan. But Rich, I just want us to talk about risk or sort of resilience. Just talk about your own experience. So, yeah, I'll probably lose half the audience here, but for those that are familiar with the Monty Python film, Monty Python and the Holy Grail, there's a wonderful set piece in that with the Black Knight that is basically gets all his limbs chopped off gradually, but never gives up and keeps on going. And I think eventually, he's just left with the head attached to his body and comes back and says, "Look, I'll come back here. I'll bite your head off." And I think, I think a successful CEO has to be a bit like that. And my experience with you has been, you've always been a great optimist, but clearly it's really hard building a business. And there are times when it must look very bleak. How do you sort of personally, or again, advice for others, how do you personally sort of keep going when it looks like you have the sort of business equivalent of your limbs being chopped off, and it's very much touch and go as to whether the business will survive?
I think you definitely you have to be optimistic. I think you have to be able to, if something doesn't go well the next day, you've got to wake up and feel optimistic and be able to transmit that to other people. So I think that's a really, I don't think it's just in business, I think in life, it's a really important attribute to be able to do that. And we've always believed so much about the problem we're solving that we haven't had to manufacture that. That's just been a kind of a very authentic way to approach what we're doing. I think for me personally, I've always, I used to do ballet back in the day, and if you do ballet, you have to love pain. You have to constantly push your body, and it is very painful building a company. Many people say no. There's constant rejection. So I think the ability to actually assimilate that and turn it into energy is also an important part of it. But the third thing, which I'd emphasize probably as much as all of the others, is you need energy from other people. So there are times where you do feel low, and it's quite hard to kind of say, we're going to go and do this, because factually the evidence is all pointing to the counter view. Well, we've been so lucky to have people around us, including yourself, investors, our board, our team, and most importantly, clients who have really backed us. And sometimes with no evidence. So that it's not like they've looked at something and said, okay, here are the reasons why Cytora are going to be successful, but they backed us because they believed in the people we are. And I think we owe them a huge debt of gratitude, I think.
Well, I just on the ballet one, I know you're also a rugby player, and I think you can extend the metaphor of it. You've got to love pain, but you've also got to just keep going and push on through. And there's a tangible goal with playing any kind of ball sport, which I think sort of links into it as well, isn't it? If you've kind of got a goal focus as well as just being able to tolerate the pain.
Definitely. I think we've been lucky enough to really believe in what we're doing. So for me, it's like when I wake up in the morning, my mind is naturally like on this problem that we're solving. And I find it really fascinating. I think about it all the time. I think about it on the weekend. So when something doesn't work the way you want, or someone doesn't want what you do, that isn't too much of a problem for me, because I'm always like, well, I believe so much in it anyway that we'll convince them or we'll figure this out. And yeah, I've always found that very naturally easy to do, because I think I believe so much in what we're doing.
And I think back to your point about advisors, investors, and others. One of the things that when organizations like yours, there's some liquidity event, you get sold, you go public. It's a reminder that the people who kind of come in the early days and maybe do work for sweat equities, don't get paid anything, but they get some sort of options. It can take a long time, but some of those do actually play out. I mean, it's still a high risk area. If you look back at the companies, the sort of cohort that started with you, or the sort of 2015, 2016, there's probably about 10% that survive those, which is a normal sort of VC investment. But therefore, we can sort of risk getting influenced by the 90% that don't succeed. It is a very helpful reminder that it's a long game, but actually, for those people who are looking at helping organizations, and sometimes they want to do it for pleasure, at some point it's kind of nice to get a reward for it. Pick the right organizations in it, and it can work out well. But also at the same time, I think you've got to be honest with people if what they're doing isn't the right thing, and probably tell them that. But you also, along the way, not just early stage, but in recent years, you've actually been able to attract some very senior industry figures to your advisory board. I mean, how did you do that? They're busy people. I'm sure a lot of people are asking them for help. How did you manage to get them to give you time?
For me, I think it was just, it was being jointly animated in this problem that we're solving. And when you kind of meet someone, you say, look, we're trying to solve how risk flows. And we want it to flow much more in a seamless way and glide like a paper airplane might glide. And today the frictional cost is so high. And when you think about the world today, there's this excess of risk and a scarcity of talent, and you have an increased volatility world in the next 10 to 100 years, and that's why we're solving this problem. It's really hard for anyone not to say, like, I want to solve this problem too. And we've been lucky enough since 2020, we pretty much doubled revenue every single year. Transaction volumes are going for our platform are growing on an exponential curve. So it isn't just like, I think the excitement about solving that problem, the importance of it, but also concretely we are solving that problem. I think people have just wanted to be part of that, and many people on the advice, the most professionally rewarding part of my career. And I think they've often thought I might have been the CEO of an insurance company, I might be on the board of brokers and insurers, but this problem is not yet solved, and we've got unfinished business, and I want to be part of solving it.
And in a sense, you're the lever. They can sort of exert their experience on the lever, if I mix my metaphors of it, and make a difference through you, which might be harder to do in a large organization as well.
Exactly. And I think everyone's got multiple versions of themselves. And I'm sure we all look back at our choices and we think, okay, well, was that the right choice? What would have happened if? We always run these counterfactuals. I think it's, if you're working in an organization, you always reflect on, well, imagine if insurance, imagine if it was at the forefront. Imagine if actually it felt more like a kind of asset management where there's a Bloomberg terminal and you can execute trades in kind of a lightning fast way. Imagine if that was the case. And the reality is we shouldn't have to imagine that. It really should be the reality. So I think it's been kind of easy for people to grip the nature of the problem we're solving and really want to be part of
it. Although, in defense of insurance, my view is that insurers are actually much better at understanding long tail risk sort of probability than banks, which tend to be more deterministic and scenario based in how they think about risks. And I think because of insurers, you had some big losses decades ago, have got much better, and the models are available to do it. So, but the difference is, I think it's a speed of transaction that's there, and then you said the sort of the lack of data, it actually causes a friction on that. But just looking forward, so what happens now? You've got a large organization that's backed you, a very strong US presence. What does that allow you to do that now that is accelerating what you would have been doing otherwise with Cytora?
Yeah, so it's really exciting. Cytora will be a division within Applied. We'll continue to operate as Cytora, provide and scale our platform across all workflows, all countries, all lines of business on a global level. So it's going to allow us to inject much more resources than we've ever had in the past, really to scale up Cytora. At the same time, Applied obviously have built a huge business in the agency and broker market. where the majority of agents and brokers, particularly in the US market, use Applied, that will mean we can have a huge impact on really accelerating how we digitize those workflows and really create capacity for agents and brokers to just do a lot more and with the same number of people to actually place a lot more risk into insurance markets. So allow us to really broaden our addressable market. And that's really exciting because ultimately that's really what we're trying to do. We're trying to increase our impact on the industry. I'll continue to be the CEO of Cytora. I'm reporting to Graham, who's the president. I'm incredibly enthused about this next phase. It's kind of for me, it's a natural progression of where we're going, and our entire team obviously will continue within Applied, and our plan is to more than double headcount over the next year. So it's a very exciting time for us.
And I'm sure from your personal point of view, I mean, the role of CEO is exciting in some level. You're building a business, but there's also a lot of work, as you know and have gone through most recently, of looking for your next round of funding, also just organizationally managing the business, making sure you can make payroll. I'm sure intellectually, if nothing else, for you to now really to be able to focus your time on this whole point about making the risk flow cleaner, decision-ready risk is very exciting as well, because that's sort of what you've been trying to do with the business. Now you can double down on that and focus it and hopefully move even faster.
Yeah, no, it really is exciting because, it's, at some point you reach natural limits of kind of, if you think about what you can achieve within one company, one set of people. And I think joining forces with Applied really allows us to abstract up one level and really see the problem from a higher altitude and vantage point, and then solve that problem in a really foundational way. So it's really exciting. And actually, when the deal completed, I felt this really kind of strong sense of happiness that we'd kind of reached this milestone, and we were like this kind of renewed belief in this next phase. Which, because sometimes you can have a vision, and being honest with yourself, you're going to think, well, that the later phases of that vision are going to be hard to achieve. Like a lot of things need to come together in order to achieve those latter phases of where you're trying to get to. And I really felt with Applied, many of those kind of latter phases of where we're going as a company and how we're really trying to transform the industry, they came into a much stronger relief. And I felt this very strong sense of confidence and conviction that we're going to accomplish them.
Yeah, I'm sure it's a strong sense of relief as well, as you put 10 years into this business, and being able to benefit from it, locks on that benefit in and go on for the next thing gives you the best of both worlds, really. But again, maybe just advice for others, but as we both know, when you go through a sale process, there's a huge amount of due diligence. No matter how well prepared you think you are for it, always more than you could have contemplated. What advice would you have to people that are in different stages of business? Because not everyone's looking for an exit, but sometimes these things happen without expecting it, in terms of just making sure they're ready for that process and that runs through as seamlessly as possible.
Yeah, for us, I think it really helped. One thing we did was, because we built our platform, I think, in a very scalable and accessible way, we actually provided access to our platform to Applied on pretty much day one. We're like, here's our platform, feel free to kind of run different POCs. And it was really nice because it led to this kind of shared confidence and belief in ultimately how we're going to address all of these different use cases, whether it was a insurer, a reinsurer, a broker, an agent. And I think that created a very strong belief in what we were doing. And then we spent a lot of time together. We had many weeks where we spent 3 or 4 days together with our team and their team, whether it was in Chicago or London. And I think that really strengthened my belief in just the energy of their team. And their team are incredibly hungry and ambitious, but also very humble as people. My instant reflection after meeting the Applied team was, like, we would want to hire them at Cytora. And then vice versa, like, if I wasn't doing Cytora, I would want to work with them, because it was a very kind of natural feeling of we're ultimately trying to achieve the same thing. And they'd obviously come at it a lot from the agent broker side. We come at it predominantly from the insurer side. So it was a very natural progression. And I have to say, Tom, who's our CFO, did an amazing job actually taking the lead on the deal. So he was absolutely brilliant. One was brilliant. And yeah, I just kind of did my best to stay focused on building our business, because obviously you're having these conversations, but you're obviously trying to really accelerate your plan for this year. And the strong aspect of this is, I think we accomplished both. So we executed really well during that period, and we built a great relationship with the applied team.
That's great. No, I mean, it's a great sniff test, Dad, isn't it? When you're working with people in that capacity, before you kind of commit to the deal, you're kind of going through the dating process, and then you sort of decide you like each other, and you've got a reasonable confidence that once you're committed, the relationships are going to continue, as opposed to just coming at it blind.
The excitement factor for us was just so authentic. It just felt like we were like brimming up with like excitement about what we were going to do together, and it felt very natural. We didn't have to kind of theorize about why it made sense. It was just like, this makes complete sense. And yeah, so I've never done like this kind of acquisition before, but I really thought about it mostly from the stomach. Like, that, does it actually feel like the right thing to do? And regardless of how you think about a company and its independence, if you just had to think about, is this going to be a force multiplier? Yeah, for me, it was a resounding yes.
Yeah. No, I mean, you haven't made the deal size public, and I understand why. But I mean, having known the business quite well, I think as I look at it, to me, it feels like this is. If you went back 10 years ago and you said this is where I'm going to end up in 10 years, it probably would have been somewhere. There's probably somewhere with a paper of Richard Hartley's goals for 10 years. And it's funny how that works in life in all sorts of strange ways. That sort of manifestation of, here's my goal, I'm going to work to it, and actually that's often where you end up if it's an ambitious goal, and you're sort of sensible about it, as opposed to just not going through all the hard work you've got to do to get there. You get there. You've obviously got a lot going on. Anything final before we wrap up?
I'm looking forward to the next time we do this, and I'm sure we'll have more exciting news of our progression. And I think about when we met, around 10 years ago, and where we were then and where we are now. And I hope 10 years from now, if we have a conversation like this, there'll be a similar multiplier in our impact. So I'm excited about that.
Good. Well, we've got you on record of saying that now, so we can come back in 10 years' time and see how you've done. But that's been tremendous, Richard, and congratulations. It's been great to see you do that. It's an inspiration for lots of people. It's a great, it's important. It's a great marker for other companies in the UK that are looking, to grow and expand and validate what they're doing, not just financially, but also just technically as well. Proving that this is actually real and people are prepared to support it. So for many reasons, congratulations. And yeah, I look forward to seeing you face to face and catching up over dinner and celebrating in person.
Looking forward to it. Thanks so much, Matthew.
Well, if you've made it this far, then I'm pretty sure you found that as interesting as I did. The Instech podcast comes out every Sunday morning, where we spotlight the latest news, leading voices, and freshest updates across insurance that you need to know about. If you would like to take part in these conversations, head to www.instech.co to find out how you can join our network and be a part of the insurance intelligence for the curious.